following information. Calculate cash flow from investing activities. We've been given machinery at cost and accumulated depreciation. We've also been told that a machine costing 50,000, having accumulated depreciation of 20,000, was sold at a profit of 10%. Right now, before we can go about making entries into the table, right, what we are calculating is cash flow. Okay, cash flow. Okay, and it's inflow and outflow. So cash flows from investing investing activities for the year ended 31st March 2024. All right, and obviously there will be purchase of machinery, okay, and there will be sale of machinery. We need to find out how much goes where. Okay, and for that, we can begin by making a machinery at cost account and a accumulated depreciation account. Okay, so here machinery account. Next, accumulated accumulated depreciation accumulated depreciation account. All right, so at cost, opening balance is this, closing balance is this. So to balance brought down 3 lakhs and buy balance carried down 3 lakh 80. To balance brought down 3 lakhs and buy balance carried down 3 lakh 80. Apart from that, accumulated depreciation. Okay, remember that machinery is an asset. Assets by default have debit balance. Accumulated depreciation has a credit balance because it's a deduction from your asset. Okay, so this time around, it'll be on the credit side, buy balance brought down 45,000 and to balance carried down 62,000. Okay, so buy balance, buy balance brought down, we have 45,000 and to balance carried down, we have 62,000. Okay, and this is a basic debit credit. Okay, I'm doing this here also. Debit credit. Now, back to the question. They're telling us a machine costing 50,000, on which accumulated depreciation was 20,000, sold at a profit of 10%. Okay, and we have to do the math and decide what is the profit and loss. So the accumulated depreciation is 20,000. We are going to send that back to the machinery account. Okay, so from the accumulated depreciation account, having a credit balance 20,000 is reducing. So we will debit the accumulated depreciation account and send that amount back to the machinery account. So machinery account for the amount of depreciation for the asset being sold, and immediately in the machinery account on the credit side, by accumulated depreciation 20,000. All right, next we have sold at a profit of 10%. Now you need to keep in mind we have to find value, book value, which is equal to historical cost minus accumulated. Okay, accumulated depreciation. Okay, make sure when you write it, spelling is proper and it is written clearly. Anyway, the book value for us is going to be the original cost, historical cost, which is 50,000, minus the accumulated depreciation, which is 20,000. So we get 30,000. And after that, profit or loss is equal to sales proceeds, how much we're selling it for, okay, minus the book value. Now, I'm going to take that calculation downstairs because we need to think a little bit. Right. So, one more time, profit or loss is equal to sales proceeds minus book value. Now, we know that the book value is 30,000. We know that the book value is 30,000. And they are telling us that it was sold at a profit of 10%. Okay, so 10% of 30,000 is going to be 3,000. Okay, and therefore your selling price is going to be 33,000. Right, so this becomes important because we are selling an asset for that much. Okay, and uh, we are making a profit of this much. And both of these will end up in the machinery account. The profit will come on the debit side to profit and loss account, to profit and loss account, okay, for 3,000. And we're selling an asset for 33,000. So by cash or bank account, okay, normally it's bank account, but it doesn't matter. In the cash flow statement, cash and cash equivalents, one and the same, 33,000. This 33,000 that we have over here is a cash inflow from the sale of an asset, which we can immediately write in the cash flow statement. Okay, so what we have over here is sale of machinery for 33,000. And what we now need to calculate is purchase of machinery. Okay, purchase of machinery. And the fact that 3 lakhs became 3 lakh 80 gives us an indicator that yes, something was bought, but we have to adjust for what has already sold. Okay, and now we can go ahead and decide how much has been purchased. Okay, and that's going to be the balancing figure. So whichever side is heavier, we write on both the sides. Okay, and since we've already dealt with sale, purchase comes here, it must be that the credit side is heavier. But you can always check. Anyway, uh, 20,000 plus 3 lakh 80,000 is 4 lakhs plus 33,000 is 4 lakh 33,000. 4 lakh 33,000 I am writing on both the sides. 4,33,000 I'm writing on both the sides, and then I'm subtracting the lighter side. And notice how this is 3,03,000. Okay, so if I take 4,33,000 and subtract 3,03,000, I should get 30,000. And this will be to cash bank, which is basically, okay, which is the balancing figure and the purchase of machinery. Okay, so if buy cash bank is sale of machinery, to cash bank is going to be purchase. Debit what comes in, credit what goes out. 4,33,000 minus 3,000 is 4,30,000 minus 3 lakh is 1,30,000. This 1,30,000 is going to be purchase of machinery. Going back into the cash flow statement, purchase of machinery we have decided is going to be 1,30,000. 1,30,000. Now remember, when you are selling machinery, it is a positive number because money is coming in. Purchase of machinery is a negative number. Money is going out. So what we have to do is put it in brackets like this. Okay, and now we solve for the difference. Okay, and that number, what we get, since it's a negative number, we will say net cash used in investing investing activities. Investing activities. Right? And we can write that in the outer column. and that amounts to negative 97,000. Negative means we know it's an outflow. Now, with that, okay, with that, we are done with the requirement of the question, which is calculate cash flow from investing activities. Apart from that, what you need to keep in mind is it'll be good if you, like over here, we have closed the account. All right, over here also it'll be nice if you close the account. Is it needed? Not needed. Okay, the balancing figures P&L account. If you were maintaining a full-fledged cash flow statement, then this would have been added back. Okay, the balancing figure is by profit and loss account, profit and loss account, and that is what we add back. That is what we add back to the profit for the year. Okay, in order to move towards calculation of cash flow from operating activities. Anyway, 82,000 minus 45,000, 82,000 minus 40,000 would have given us 42,000, minus 5,000 would have given us 37,000. All right, so this is just for the sake of neatness. At the end of the day, the most important thing was getting hold of the purchase and sale of machinery, which we have done, based on which we have been able to finish the net cash flow, okay, in investing activities. Any doubts, feel free to message in the comments. And of course, please like, share, and subscribe. Thank you.